Hey guys, welcome in this new video. I hope that all of you are doing great. In this video, we will take a look together at the stock market, especially the Nasdaq, and we will see basically what is there to learn about it and kind of to put you guys in context maybe of what we are actually seeing right now on the market. So just before that we start, as always, please leave a like under the video. I would really appreciate it, and make sure as well that you are subscribed to the channel so you don't miss any new videos coming out in the future. All right, so let's get right into it. I don't want to waste any time here. So first chart that I'm showing you guys here is the Nasdaq currently. So what is the Nasdaq for those of you guys who maybe don't know? The Nasdaq is basically the stock market index for the technology businesses, okay? So in this index, we have, for example, Tesla, Amazon, Microsoft, Apple, all these kind of tech businesses, right? So this is the index which puts the biggest of these companies together, and that gives you basically an overall outlook of the tech businesses, right now. So that's kind of the idea. And so when we look at Nasdaq currently, well, we can see that it's at all-time high. So basically what happened is that at the beginning of the year, we had the coronavirus pandemic crash. So I will highlight on the chart right here so you guys can see where it is. And then after that crash, it made a low and it started to go back up. And right now we are at all-time high. And since then, really, this market has just been going up and up and up and up. We have a very strong uptrend that is starting to get a lot of attention. If you just look at the newspaper or on Instagram, you will see a lot of people are starting to talk about it in a positive way, right? So, oh my God, it's going up. Wow, such an amazing opportunity. A lot of these stocks have crazy performance, right? So a lot of people are excited about it, and that's exactly the reason why I'm making this video. If you guys know a little bit about my style, you know that when things get like that, when everyone talks about something and when everyone is excited about a market, this is where I am very cautious. And in this video, I will show you guys why I am very cautious and why you should probably be at least a bit cautious as well. So this chart here is once again the Nasdaq, but in the year 2000. So in 2000, we had the tech bubble. So years before that this bubble exploded, we had a massive bull market on the tech businesses. And this is where everyone was bullish, okay? So I did study a lot this period myself, throughout my career as a trader, because I like to understand this kind of movement where the markets really go crazy. So I can tell you that during that time, right, where we had the tech bubble, everyone was bullish, not just the retail traders, not just the retail investors, even the professionals, even big names such as George Soros, for example. Everyone was bullish, especially around the top of it. People were very, very, very excited about the tech bubble, and people were finding all kinds of reason for these valuation. And that is the reason why we say that it was a bubble, because the value of the business in itself, right? So the profit that they make versus the price that you pay for them on the market were completely disconnected. And so that's the reason why we say that it was a bubble. Everyone was bullish, and one day this bubble burst and the market came back down very sharply, as you guys can see. So first of all, right, am I saying that we are in a bubble? No, I'm not saying that. But am I saying that things might or they could potentially develop like that? Yes, that is a possibility. Now, I know that this is a very contrarian approach, okay? Everyone right now, as I said, is bullish on these stocks and on this market, right? If you look on the newspaper, if you look around you on Instagram, if you look at other traders, everyone is excited about that. Everyone is talking about these stocks. Everyone is looking at Tesla, for example, which is probably the greatest example of what a bubble really is, right? So if you look at the Tesla stock, it's about, the price that you pay versus the profit. So the PE ratio is about 400 times. So you have the profit of the business versus the value of it on the market. And so there is a 400 times difference between those two, which is completely nuts, okay? So this is probably the greatest example, and that is one of the stock, of course, that has been leading Nasdaq to go so high. But as I said, there are some other big stocks as well. And so when you look at this type of movement, the problem behind that is that there is no way to rationalize this movement on a fundamental basis. So there's no logical reason behind that. It's all mass psychology and it's all human emotions that are driving these markets higher. Now, one thing that is important to understand is that some of these stocks, so for example, I'm thinking of Amazon, did actually profit from the lockdown that we had a couple of months ago. Because when everyone was in lockdown, well, nobody was going out and buying stuff, so everyone started to buy on Amazon. So there are some of these tech businesses that really did profit from the crisis. So some of them, I would say, it already makes a bit more sense for it to go up. But Tesla is probably the least logical one, because if you just look at it, I mean, as I said, the profit versus the value of the business, they're completely disconnected. It's really crazy. And if you look at people buying Tesla and if you ask them why they're buying Tesla, they all have the same explanation, right? Oh, I love the business. I love Elon Musk, right? Such a great guy. He will revolutionize everything, right? So these are kind of more emotional and not very logical reasons behind why this stock is going up. And so, here it's really important to understand my position. So the reason why I'm showing you guys all of this, I'm not saying don't buy, or I'm not saying buy neither. I'm not telling you guys what to do. And to be quite honest, myself, I don't even have a precise opinion on this, okay? But what I like to do as a trader or as an investor, I like to look at the facts. I like to look at things in perspective, in their relative environment, and understand what's actually going on. So when I look at a stock like this, do I want to buy a stock that is going up crazy like that, with such difference between the actual business and the value of it on the market? Well, personally, not. It's not something that I want to get into. Now, once again, I'm not telling you guys what to do, right? You do what you want. But my point is simply that I would say that it's important in those times to be very careful. Because when everyone is thinking the same thing, when everyone is bullish on one thing, these are the most sensitive kind of market conditions where if something starts to go wrong, there can be massive movements very, very fast. And most of the time, these movements, when the bubble kind of bursts, well, they are to the downside. So all I'm saying is to be really careful, because what we are seeing right now on the Nasdaq, quite frankly, reminds me of the 2000 tech bubble. Now, as I said at the beginning, I'm not saying that it's a bubble right now, but it might become. And if it does become a bubble, if everyone is bullish, at one point, things will go back to normal, okay? And so that's really important to understand. Like, if you look at these stocks right now, right, whether it's the individual stock or even the index, it's not going to go up like this forever, okay? Like, if you just look at them on the weekly or on the monthly chart, it's a straight line to the upside, right? So my point is that it's not always going to go like this. At one point, we will get a deeper correction, right? And so the problem is that a lot of people, a lot of retail traders will end up buying around the highs, right? When these highs will come, they will get trapped into a deep correction, and a lot of people will lose a lot of money. And that is the other side of the coin that a lot of people don't want to look at, right? But if you end up buying these kind of things very high, and if we get a deeper correction, well, you might get a pretty big hit on your portfolio, on your investment. And so you will have to either live with this hit for quite a long time before that it recovers, or you will have to take a bigger loss than what you probably thought you could take. And so that is the reason why these movements are so scary to me, right? So as you guys know, as a trader myself, I'm very contrarian to a lot of people, right? I like to think a little bit differently than what I see most people thinking. Because the moment where everyone starts to talk about something, it's usually a bit late, okay? So if you go out, right, I'll just give you guys a funny example. If you go out and you go to the restaurant, right, and you talk to the waiter there, well, if a random guy who works at a restaurant, or a random guy who works like anywhere else, right, it doesn't really matter. If you talk with these people and they start to talk about Nasdaq and Tesla and things like that, this is where you know that it's a bit crazy and that it's a bit overvalued, right? If everyone, even people who are not even related, really to trading or investing, talk about something, then that is the best time for me to be really careful. And so, you know, this video might be a bit controversial because, as I said, right now, if you look at other videos on YouTube of people talking about that, everyone is bullish, everyone is super excited, it's crazy, right? It's the greatest time to invest. We will all be millionaires very soon, right? So, you know, everyone is kind of in this, I would say, euphoric mentality. So, you know, take it as it is, right? I'm not, you know, I don't have the truth. No one has the truth. No one knows how these markets will develop in the next few weeks, in the next few months, in the next few years. No one knows the future. But the only thing that I know personally is that history tends to repeat itself, right? Things tend to repeat themselves over and over again, simply because humans are the same as they were, you know, a long time ago, right? We don't change very fast. Evolution takes a very long time. So the way that we think, the way that people invest, right? Like what is the driver behind these investments? It always has been the same, and it will be the same for a very long time because humans don't evolve very fast, right? Like, you know, if you look at evolution, it takes, you know, thousands of years for things to start changing a bit, right? So things have always been the same when it comes to investing in the stock market, and they will be the same for a very long time. As long as humans are behind these transactions, things will be the same, and you will see the same kind of euphoric movement driven by emotions. So just like we said at the beginning of the video, if we look at the fundamental picture of things, there's no way to rationalize these movements. The only kind of reason, as I said, is that some of these businesses did profit from the lockdown, which is a valid point, I would say. But for some of them, just like Tesla, there's nothing like that. So it's really important to put things in context. Now, something else as well that is really important to understand is that the stock market is not a reflection of the economy. Okay, these are two completely different things, because if you look at the economy right now, well, it's not going so well, right? There are a lot of businesses who will go bankrupt in the next months, in the next couple of years. A lot of people will lose their jobs. So it's not as if we had the greatest economy ever, but the markets don't reflect this reality, at least for the moment. So, you know, that's why there has to be a balance between understanding fundamentals and also understanding that the markets don't necessarily need to reflect fundamentals, which is why there's a lot of gray into my answer, right? But when things get too crazy, this is where, you know, you have to be the most careful about. When these stocks are gaining, you know, 5, 10%, 15, 20% per day, this is where you have to kind of be like, oh my God, okay, there's something a bit weird, a bit too much going on right now. So I need to kind of take a step back, not go crazy, right? And kind of just breathe, right? And let things be, okay? So if you decide to invest your money in these things, or if you already invested your money, I hope that you know how to calculate your risk, okay? I hope that you are careful with these moves, because I'm telling you, more often than not, when we see euphoric type of movements like this, eventually, sooner or later, things go back down. They can go back down quite deep. And if you're not prepared for that, if you're not risk managed correctly, then this can be very damaging. And a lot of people, it's always the same thing, but when these things start to go back down after a big bubble, a lot of people lose money, right? And they lose a lot of money. So you might not lose money if you know what you're doing, if you know how to control the risk properly. But my point is that you have to be careful. I'll leave it there, all right? So I hope you guys enjoyed this video. I hope I made it clear. As I said, it was a probably kind of controversial video, but I feel like as someone who has, you know, quite a bit of experience on the market and who has been profitable for quite some time, I feel like I have a kind of responsibility in some kind of ways to share this with you guys and to maybe just put some perspective on all of these things, all right? So if you guys did enjoy the video, make sure you leave a like, and don't forget as well to subscribe to the channel if it's not already done. And yeah, so on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.